be the process that I would undertake from the day that I decided that I wanted to go and purchase a property until settlement date, say?
So the process would be normally, hopefully, to approach us first to look at getting a pre-approval. So from that point on, once we've got the pre-approval, then you go to the market, you find your property, you sign your contract, you still make it subject to finance because we still need to do a valuation. So we have our pre-approval, you've signed your contract, you bring it back to us, we then order a valuation which the bank will then undertake. Once that process has happened, then basically we go to documentation, you sign your documentation, and then generally settlement will happen 2 to 3 weeks after that. So the whole process from start to finish can be probably 4 weeks.
What happens if the valuation comes in less than the pre-approval amount?
If the valuation comes in less, then pretty much what we need to do is go back and revisit whether or not you've got additional cash to cover that shortfall that you have in the valuation, and whether we need to reduce that loan amount if you've got that ability to do so. So that's why we have subject to finance in those conditions. Even if we have a pre-approval and the property does come back, then we have a little bit of room to move there. And if it doesn't turn out that we don't have enough deposit to make up that shortfall, whether it be from yourself or from family members, then basically we can say that, look, you haven't been able to meet the conditions of the bank's approval, and the property just let go, it goes back onto the market.
What if the opposite happens, then that the property's valued at more than what the loan?
Well, if that's in your favour, it just works out to be good luck to you. Okay. I mean, the loan will stay the same. We don't need to borrow anymore. You've only purchased it for that price, even though it's valued at that price. That's what we've based a loan approval on, so it stays the same, it doesn't change.
So at McKern Finance, you offer a complimentary health check for somebody wanting to understand their borrowing capacity, what they can and can't achieve. What does that system involve?
So basically, we're happy to sit down with people if they're not, if they're wanting to look at buying a property for the first time or looking at buying an investment property, and just go through and have a look at their current situation, have a look at their current interest rates, for example, if they have an existing loan, and whether or not we can get them a better competitive deal, and at the same time to see if we can actually get an additional loan for an investment property for them. If they're first-time borrowers, just to work out what their borrowing potential is, and give them a bit of a guide as to what they can afford for when they're looking at going into the market and buying a property, and what deposit they'll need to have when they go to buy that first property. So that's a service that we like to offer for clients. It could be 20 minutes or half an hour, but just a bit of a general overview, just to give them an idea of what they can and can't do.
And is there any tips that you would give people prior to coming to see you for that?
Yeah, look, I would suggest if you're just PRYG, you're not self-employed, just bring in a couple of pay slips with you so we can see, what sort of income you're generating at the moment, and a little bit of a list of what your current liabilities are in terms of what loans you have and what your repayments are. For self-employed, pretty much, if you're not an existing client of McKern's, bring in your financials with you, and also a list of your existing debts and what you owe, and then that'll give us something to work with.